to the RationalMr.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Welcome back to our Frivolity, our free video broadcast here. We do Monday to Friday on YouTube. With the team's considering what our path should be going forward here with regard to YouTube. It is interesting, actually. I even posted, yeah, I just put that on because I've got the air conditioner going in the background. It's pretty hot here on the West Coast. And it's awfully tough to hear what people are saying. So that's, I've got the headset on here today. So anyway, interesting that you commented on that. I don't know whether it looks any good or not, but anyway, here I am. Anyway, like we had an interesting comment. Somebody posted that they actually were looking at these YouTube videos in this channel and noticed that there's clearly something going on in the background. I've noticed the number of views has dropped off quite dramatically. And people are saying playing back these videos is very difficult. So anyway, we had a long meeting last night with some consultants with regard to the website and us trying to get the message out and the most effective use of our time and our capital. So don't be surprised if we do have a few changes in the works over the summer here. We're definitely in the process of retooling. I suppose the good part about it is that I believe that the market is in one of these transition years, and I don't think it's going to be a straight line. If anything, I'm quite concerned that people are kind of getting sucked into a bit of a euphoric top here, just especially with regard to like the Nifty 50 tech stocks down in the States. We did have a very interesting sort of futures, lower time frame setups this morning. So, you know, I do see that that's sort of part of the market. Yeah, it's just business as usual. But because I had these meetings later on last night, and we deal with people all over the world. So for me, I had to be up. We were still talking well past midnight. So unfortunately, I missed the morning day trading session. I have a strict rule, and you guys have seen my spreadsheet. You know, if I was going to teach a boot camp on how you want to set yourself up to maybe run a small business of day trading, how would you go about it? I always start off with, I always ask, you know, how's the computer? Is it most important in this world? Are the computers happy? Because if they're not, uh-oh. Then I ask, you know, how's my diet? Do I, you know, and really this should be diet, exercise. I think on balance, doing okay, but you can see a little bit slippy here of late. Didn't really have a good day Thursday, but yeah, this morning I had my bananas and muffins and the like. But wow, I am just having the worst sleeps. And like I said, I didn't get to sleep till geez, better part of 1 o'clock, and you know, to get up at like 4 or 5 o'clock in the morning and operate effectively off of like 4 hours sleep is never a good thing. So only 4 hours of sleep, so I officially put myself in the penalty box. I'm just not allowed to trade, and that's fine. I mean, it's just the way it goes. If anything, a huge part of your learning curve to become a professional in this business is you have to self-monitor and you have to acknowledge when you're not setting yourself up for success. Of course, Murphy's Law. I mean, you want to see a killer trade. Oh my goodness, drives you crazy. This is actually textbook exactly why you do the opening range trade. This is the crude oil contract for this morning. There is the opening bell. We were well outside of the previous session's range. So this is basically a case of, does the market open up and accept the fact that we are higher and moving our way up? And actually, you might even have what's called a gap and go scenario. Or does it flake out and it just simply has to come back to the previous day's session and sort of regroup? Quite often what ends up happening is if we do open up outside of value and outside of previous day's range, and the market's unsure about where it really wants to be, it'll just simply head right in a straight line right back to the previous day's POC. And I think you can actually see that. I mean, this was just a stunning trade here today. But, like I said, sadly, I missed the trade. But anyway, that's the way it goes. So, yeah, so there we were opening well above yesterday's range. The market slammed down, and look how it basically slammed right into the POC there. And you can see a lot of volatility came in on the tag of yesterday's POC, which is actually very normal. You might even argue that this was also good old Johnny Hoagland. This was his 80% play. So we opened up outside of yesterday's value high. We came back down into yesterday's value high. We spent 2 consecutive 30-minute bars inside previous session's value high. So that means 80% of the time we should go down and visit yesterday's value low. And that's basically what that move is. Boom. So, I mean, just it's Murphy's Law, right? The days that you don't set yourself up for success are the days that you will see your most pristine, perfect setups come and go, and there's not a damn thing you can do about it. It's a trader's life. What's fascinating about today, although I don't know whether I could show you or not, why did the market move the way that it did? Geez, can I get my head on straight here? Which screen is that? I guess it's this screen. We actually had a day today, very rare, where actually all 3 markets that I follow, the crude oil, the gold, and the stock market, all came into levels. And, considering this is an options expiry day, it's the big May options expiry day. I suppose we could talk about that in a minute if we have time. Might delve into that in the after party show. It was kind of funny. I mean, I do this on a weekly basis. And even last Friday, I even mentioned, let's pay attention. Next Friday is a big options expiry event. So pay attention. And I mean, it's just absolutely stunning how cliche this was. So yesterday, and they always say in the options business that most of the business is actually done on Thursday. And then Friday, the actual options expiry day, is unfortunately where retail freaks out and they often panic buy, panic sell. But the institutional players, they've already established exactly where they want the market to be. And as a result, they take it out there. So you can see clearly, I mean, please learn from this. I mean, if you need to take our education programs, we do teach this very extensively in our level 2 and level 3 program. But here you can see, this is the Dow options actually here. Let's go and look at the spiders, because the spiders, the S&P 500 is just brutally corrupt at what they did here. I mean, it's such a good lesson for everybody. Will anybody listen to this? I have no idea. But anyway, I'll just keep barking away until you guys are not interested anymore. You can see like 90%, 90 to 95% of all puts in the market are written by institutions. And of course, if you write an option, that's a legal obligation to do something. In this case, if you write a put option, it is the legal obligation to buy an asset if the option expires in the money. So is it in Wall Street interest? Keep in mind, they write 90, 95% of all these options that you see here. This is the open interest column. Is it in Wall Street's interest to make sure that they get the market as high as possible so they aren't legally obligated to go and buy the S&P? And look at this. This is insane. 420 is the magic strike. Look how many options they wrote above 420. And look how many options they wrote below 420. And some of these numbers, like the 400 strike, you don't even see on the screen here. There's 150,000 contracts that they wrote. That's something like $30 million just in that one option. The next higher one, this 410, that's 83. That's $15 million right there. sitting on the hook. If the market goes out below, Wall Street's on the hook. If it goes out above, Wall Street just pockets the money. I mean, please learn this. So it's not a surprise that you look at the S&P 500 today. Remember that 420 number? And gee whiz, where the hell is the S&P now? I mean, this is stunning how this stuff plays out, folks. It really is. So where's our good old ETF, SPY? Boom, there it is. Boom. And here we are, 418.28. Now, what do you think the odds are that we mysteriously find ourselves back up around that 420 number heading into the close? I mean, if you want a fun little assignment, interesting how they had the market above 420. Mr. Powell came out and was speaking at a conference here. It actually set up a really cute little ES short trade that I'm kicking myself. Like I said, I put myself in the penalty box because I didn't get that much sleep last night. And so when I have little sleep, I'm not allowed to trade. But in essence, here was the short setup. And I was just kicking myself because one of the other day traders in our day trading room, he actually was able to get in on this short and he made some good money here. So congratulations, Ed. Way to go. But like I said, I didn't set myself up. I've got a bit of a headache right now. But long and short of it, Brian's, anybody who's a longtime watcher of this channel, Brian's big fat fib. I mean, what a trade level. Holy carumbies. Couldn't believe that when I saw that this morning. My hunch is probably by time we roll around to expiry and the end of the business day, they'll probably have worked the market back up top here. And actually, this will be an interesting anecdote because if they do actually close this out below 420, then it does mean that a very small number, but some of those options will expire in the money and they'll be, of course, forced to honor those legal obligations. But the numbers up top here are just, they're almost laughable. Markets here 418. So let's assume that the 420s and the 419s, right, will both expire in the money. So what kind of dollars are we talking about here? There's the 420s, there's the 419s. That's a combined total of about 10,000 contracts roughly. And I mean, you can see all these like 80,000, 30,000, 30,000, 60, 70,000. And of course, like I said, the really big one, 140,000 at 400. But I wouldn't be surprised if we mysteriously find ourselves closing out up top here. Well, we'll see how it goes. Anyway, so there's your sort of why I think the markets are moved where they are. And like I said, to start off this broadcast, historically, and probably write this down because it's pretty good information for you to have in your diaries. Usually, especially when we talk about the big monthly contracts, because the monthly contracts are the ones that most people in retail participate in. Very few people in retail participate in the weekly contracts. Those are just for the degens. So this is the how do you say this? The rule of thumb is that you're going to see the most volatility on the Thursday, and then Friday itself is actually pretty much a non-event day. And you can see SPY right now is down, what, 0.2%. And as I said, I wouldn't be surprised if you actually find by the end of the day, this is actually up a point or two, right around that 420 level. And of course, Wall Street hits a massive home run. So, and with that backdrop, I guess it's kind of interesting, like the actual econs today, I didn't really see anything dramatic. And news, I'm not really seeing anything to really, knock the cup off the ball. News wise, like, oh my God, did you see that kind of thing? It is interesting. I've noticed like Wall Street Journal is kind of a puppet of Wall Street. And man, they love to constantly dog crypto. So I do see that kind of tone developing in the marketplace. So all the crypto fans, we did go through a very nice little seasonal window. keep in mind institutional players buy down markets, and the only way that they can buy down markets in size is they have to freak out the public and all the little people in this world to sell and panic dump into lows. So seeing, I wouldn't be surprised over the next month or two, there's a lot of negative sort of chatter about crypto to encourage you to panic sell. Just keep that in the back of your mind. Econs, today was almost a non-event day econ wise. Uh, you know, retail sales in Canada, this isn't really that great of a commentary. I think the general message that we've seen of late is the consumer is dying 1,000 deaths right now. And hell, we even see it at TRI with school enrollment and stuff like that. Consumers don't have any money, and they're getting absolutely screwed at things like the grocery store, rents, clothing, the airlines. Big airline in Canada here's officially on strike now. So that, obviously those price pressures will just be passed right on to consumers. So travel, everywhere the consumer's getting absolutely screwed. So it doesn't surprise me to see that the consumer is dying 1,000 deaths. Interesting anecdotal evidence out of Canada here today to reaffirm that. And of course, we've talked lots about this, and don't get Brian triggered, but the whole point is North American housing is like the preferred asset of choice to be invested in for like Chinese pension funds. Certainly aren't going to invest their money in China. Would you give Winnie the Pooh your money? I don't think so. So, and Japan, Korea, Taiwan, even European, the Arab nations, all this wealth, everybody's preferred asset purchase is North American single family homes. And of course, people like Mr. Fink know this, and they're basically trying to corner the housing market. So the housing market is just stubbornly strong. And as long as they come and say, okay, you're building 700 houses, fine, we'll take them all. Boom. I mean, there's no way you're going to get that price inflation to come out of that equation until Mr. Powell breaks their backs. And all the rhetoric I'm hearing out of the Fedsters, and like I said earlier today, we did have the Fed talk a little bit. I don't think they actually really said anything new here today. This was more a conference of sort of circle jerking. They got this guy. This is the guy. If you were going to blame one person on the insane inflation world that we're living in, it's this gentleman's fault. Now, he would say, well, you could have the relatively okay inflation world that we live in now, or we could have gone through another Great Depression. So which would you rather have? People in food lines or a bit of price inflation? Now, me as a hard money guy and as a guy who absolutely hates inflation, as a guy who hates big government, as a guy who hates communism, as a guy really who doesn't like socialism, I would have preferred that we go the Great Depression route. And all of the grasshoppers, they freeze to death because they are bad money managers and bad business managers versus the ants coming and bailing them out, which is basically the world that we're living in. And I think I've shown you that, there's politicians in my country that are like, well, if times get tough, we're just going to go into people's bank accounts and take their money. And that's how we'll fund bailouts. I mean, this is insane, the socialist, communist world that we're living in. And if you were going to point a finger at any one particular individual whose fault it is, it's this gentleman's. I don't think there's any ifs, ands, or buts about it, except for maybe not a big butt, but that's another conversation altogether. Broader markets reaction. As I had said earlier, it was remarkable. We had the crude oil market and the stock market come into some of the most beautiful shorting levels. Every day I show you my checklist of, sort of the cadence that I go through to try and hunt trade location. And I had like double Bombs plus some really sexy horizontal support and resistance level. That is a killer trade location. And look how far away we were from my fast moving average. So to actually see the market pull back into that level, they used Powell as the excuse to do it. Doesn't surprise me. At the same time, too, like I said, don't be shocked if into the end of the day you find mysteriously this market works its way right back up so that the Wall Street guys hit a home run. And it's hookers and blow in the Hamptons this week. Of course, all of us in the 99% won't be invited. We saw the exact same thing in the crude oil market. And like I said, we missed just the most incredible opening range trade there first thing this morning. I mean, just an absolute textbook trade location for me. Anyway, that's the way it goes. So crude's melting down here. And then I thought it was interesting. The gold market, the exact sort of, I've told you guys repeatedly that the gold market and the energy market usually move in opposites. So really good illustration of that. The crude oil market was ratcheting higher here first thing this morning. It got bitch slapped and now it's actually down on the day. And the exact opposite scenario, and this was just the most beautiful trade location yesterday at a nice Foggenbaum level, whole bunch of horizontal support and resistance levels. And of course, at this point, now they're just giving the gold away and the public's panicking and they're just dumping, dump, sell, sell, sell. So what's usually going to end up happening into that? You're probably going to find a big fat counter trend rally. And I got to say, man, this trade setup, this was pretty here this morning. They set up a nice little FU event through a reload zone. They ran the stops, and then they put in the most prettiest little double bottom. And then, like, literally, the moment these guys started talking, like, literally, the moment this market put in the double bottom, there's 8 o'clock when the conference started, and woohoo! So, not a bad idea. If you're going to play this kind of fundamental event, just wait for it to start, because usually what ends up happening with these things is it's like buy the rumor, sell the news. And that's exactly what happened here on the stock market. I mean, just the trade on this stock market was just crazy. And like I said, congratulations to Ed on the site. He totally nailed this top up here. I missed it. I'm a stupid idiot. Look at that, right at 8 o'clock, literally the moment they said, okay, the press conference is officially started. Look at what the market did. I mean, and that's right off of my BFF. If I'm going to take a trade, that's exactly my trade. What can you do? Anyway, so the exact opposite scenario, the gold market, man, that was just an absolute killer little double bottom there. As professional risk takers, that's exactly the kind of risk that you want to try and take. And, hindsight's 2020. I mean, I didn't take the trade. But it would be just something as simple as I'm going to buy this W, risk to a break of the W. I'll let part of the position, maybe, if you buy 2 contracts, can even be the micros, doesn't really matter. I'm going to let one go at 2 to 1, stop to scratch on remaining, and then hookers and blow are officially on you this weekend. Woohoo! What a trade, eh? And maybe you're trailing stops, so maybe you had your stop even now below this level. So, you'd be like locking in. I guess you move your stop to here. I don't know how you do that with this tool. But locking in as we go. So there's 1 low, 2 lows, 3 lows. I don't know. You want to move your stop down into this area, fine. Or, maybe it was just so much money being made. If you saw a nice bear div forming up top here, you're like, okay, that's my signal. Look at that bear div. Oh my God, it's absolutely textbook. So nice little inside bar failure. If you had the balls, I suppose, right? And notice too, look how we totally nailed that Foggenbaum level. Is that worth learning, folks? I mean, look at that. That's absolutely textbook. So anyway, crazy market. So now, with us getting so late in the day now, 9:30, I would actually say my day trading should be officially done. Don't really want to touch anything. I used to hunt a setup following the European close, which was about an hour ago. And you could probably make the argument that that's probably, can you, They ran the market up into the European close, 8:30. That's exactly where it was. So my hunch is there was a lot of guys that were short, and they sort of ran those shorts, big old short squeeze here into the weekend. The Europeans had to close their positions. And as soon as that European close event happened, the rally was done. So maybe there might have been a nice little short following that European close, but that's another. Yeah. All right. So why don't we'll just circle around, take a look at the corn here to finish the broadcast. You know, the gold market was getting absolutely torn apart yesterday. And frankly speaking, it doesn't surprise me. Mr. Hugh Hendry, who I think is an incredibly intelligent gentleman. About a week or two ago, he was saying, the gold market feels too loved right now. And I don't want to buy it. And it's interesting when, you go on these like Bloomberg and BNN and all these business channels, they're always going on, oh, gold bugs, gold bugs, gold bugs. You got to be a gold bug. And it was funny when he said, no, I'm not interested in gold. They quickly cut away from him and changed the subject and talked about something else, which was fascinating. But anyway, I think it was, like I said, it was just the most beautiful 4.669 tag there yesterday. And notice how we just counter trend rallied and tagged the 2.618 here this morning. I think your gold market's kind of parked here. If anything, what I think is probably going to happen is you got some sort of big head and shoulders pattern that's probably going to develop here now. So why am I saying this? I find it hard to believe that Bitcoin could rally in earnest in the face of the gold market coming off. And sure enough, about halfway through yesterday, all of a sudden the wheels started to fall off the bus with regard to Bitcoin. And we actually did some kind of nasty technical damage to the charts, getting lots and lots of smiles. Now that's a lower time frame chart. I wouldn't get too wrapped up in that for this audience. I would say just something along these lines. This is your 4-hour chart. We had the breakdown, now like a week or two ago from the M top up here. When the market dumped, remember that was on that Canadian FUD there last week. We put in bull divs. So not a big surprise, bit of a dead cat bounce. We rallied back, then counter trend rallied, and as I said, we actually started to do some technical damage there with that sell-off yesterday. So we do have the market smiling at us again from this lower level. And I hate to say it, but even now, and it's kind of hard to see on this chart, but I think we could potentially be actually setting up a nice bearish bot setup. So you can see these purple lines. They are the bearish ABCD pattern that sort of works with the bot. I would just simply draw from there to there and ask bot setup. So did we do a 33% correction? Yes. Did we go beyond 66? No. All right. So the bot is officially alive. And we're just going to simply project that off of the highs, and that's that purple line, AB equals CD. And interestingly enough, I'm just going to eyeball this because we're running out of time here. If we throw on the bot trade levels, oh, what a surprise. The M top here is basically the bot entry trade level. So for the lower time frame players off of like the 4-hour, if they weren't short off of this original M top here, the market's smiling at you. That's where I strapped on this short, demonstration trade. But if I wasn't in that and I wanted to add to the trade, you can see 1 high, 2 highs, 3 highs. This thing's starting to look heavy. If we get any kind of sell signals here, especially considering it's Friday, the way that the institutional players love to F around with crypto after the retail market is closed. I wouldn't be surprised if after the close here today, we see a bit of fireworks here in the crypto space. I'll be watching on the site with all of the sports fans, of course, how this plays out off the lower time frames. As Powell was speaking here, you can see the insane volatility that came into the market. And I think they just ended up breaking a lot of people's hearts through all of this. It's probably a good reason why you don't really want to be too aggressive heading into something like a big Fed speech, strapping on positions. Maybe wait for the event to happen. You can see this was the 8 o'clock bar here. huge spike up and then huge slam down. And then the end result was just a big hurry up and do nothing burger. I am leaning bearish, so it's awfully tough for me to consider longs. If anything, what I would think here is counter trend rallies, set up new shorts. And that's, I think, what happened here. As you notice, gee whiz, what a big surprise. That just so happened to be in a big fat reload short zone where that fail came in. I mean, not really a surprise whatsoever. So, I often talk to you guys, if you can, really try and hunt overlapping reload zones. So you can see off the higher time frame, that's this red box up here. Now, if we're looking at the lower time frame, notice we have this overlapping reload zone. Super sexy to hunt trade location in there. Had you had the balls to step in and hit that up in there, wow, what a payday you got out of that. So is there anything to do here off the lower time frames now, though? No. This actually looks very dangerous. I just leave this alone. You really want to wait for the market to start setting up new structure. And like I said, if we get 3 lower highs here, I can actually justify off of that 4-hour chart, starting to think about more trend continuation to the downside here. This is looking a little dangerous here, folks. I'll tell you that much by crackers. All right, why don't we finish at that? That's about a half an hour, so I think that's probably good value for your money spent. It's free. We have a special guest on the after party today. Good old Zug. Zug and I, we're now officially Ubic NFTs. Zug, do you have your Ubic NFT handy? Can you show the after party kids what you?
Yeah, give me 30 seconds.
No problem. I mean, we'll load up the after party. Anyway, there is Zug. Zug and I, we're having a lot of fun messing around with this crazy ledger, and he's teaching me how to be a DeFier. So thank you, Zug. I appreciate it immensely.
No worries. You're catching on quick.
Good. You can always teach old dogs new tricks, right? No, maybe.
That's right.
I don't know.
I like to believe so.
All right. I mean, just to give you an idea how cool Zug is, for fun, Zug jumps out of airplanes.
Well, actually, not for fun anymore. Now it's just work.
Well, I suppose if you like your work, then it isn't technically work, though, right?
Yeah, it's cool. I enjoy it.
But anyway, I have an immense amount of respect for Mr. Zug. Is that what we call you? I'm not quite sure. Anyway.
Zoogie Sticks, or just John, even. If you want to
John, hey, well, there you go. Hey,
yeah.
Real name in crypto? That's crazy.
I know, right? I'm not one of those. I'm not too crazy. If people want to find me, they can. Right. There's nothing I can do about it.
So the point is, we should have a really fun conversation, talking crypto, talking DeFi, talking jumping out of airplanes, talking Ubic NFTs in the after party show here today. All right, have yourselves a great day. PMA for the win. We'll see everybody on the free channel on Sunday for a lot more rants and colorful conversations, hopefully constructive, hopefully PMA, but you never know with Brian these days. I hope the people who are watching this get value out of some of the things that I say. I seem to think on a weekly basis, I'm hearing myself say, write this down, write this down, write this down. So I just hope you're all active listeners. Maybe consider just telling a friend. This is free after all. So, if you got value out of this, of course, hit the like button. Consider subscribing and also, ring the little bell on your YouTube page. And then that way you can be notified when these shows launch. So anyway, PMA for the win. All the best. Hugs and kisses. Let's head on over and have some fun with Zug. PMA, I already said that. Don't take no wooden nickels. Remember what your number one job is. Yada, yada, yada. All the best. And bye for now.